Hello and welcome everyone. My name is Julia Plaksina and I will help to moderate today's webinar, Palm Oil Price Trends 2021, Market Expectation and Sentiments. Thank you very much for joining us today. And before we move to presentation, there are a few housekeeping points I would like to cover. At the bottom of the webinar screen, you should see a toolbar. Please use the toolbar to get access to a range of applications, such as speaker biographies, webinar materials, technical support, and also if you would like to request a demo or free trial. Click on an application and it should open on your screen. And all applications are movable and resizable, so please feel free to move them around to get the most out of your screen space. If you have any questions, please submit your questions on a Q&A box, and our speakers and moderator will try to answer your questions at the end of our webinar. For the best viewing experience, we highly recommend to close any other programs or browser sessions running in the background. And the webcast is being streamed throughout your computer, so for the best audio quality, please make sure your computer speakers or headset volume is turned up. Some networks cause slides to advance more slowly than others, so logging off your VPN is highly recommended. If your slides are behind, please push F5 on your keyboard, and this will help to refresh your page. A recording of the webinar will be sent to all attendees within upcoming days. We really value feedback, so please do complete the pop-up survey at the end of our webinar. And if you would like to receive a free palm oil market report by our Refinitiv research and also our forecast team, please also complete a pop-up survey on the right side of your window. Again, thank you very much for joining us today, and over to you, Faisal. Thank you very much.
Thank you, Julia.
Thank you.
Very good morning or afternoon to our delegates, depending on wherever you are participating from. Between Dr. KP, Ahmed, and I, we will be covering the topics of global palm oil market overview and trends, palm oil market outlook, risk and opportunities, and impact of COVID-19 challenges and opportunities. I hope all of you enjoy the session. You all, like Julia just explained, you can ask your questions and we'll take the Q&A right at the end. So before further ado, I will start my presentation on the global palm oil market overview, trends, and forecast for 2021. That means, okay, I'm sorry, the slides were running a bit slow for my computer, but anyways, I hope you guys can see the first slide that we are on. Let's look at the key market developments in the last 3 months, which have had an immediate impact on trade or likely to have an impact on the trade in the coming months. The most important development in the last 3 months that has changed is a change in the duty and tariffs in both importing and exporting countries. On December 10th, Indonesia adopted a progressive export duty structure and to support their B30 biodiesel program. And on the current prices, the applicable levy on C2 export is USD 255 per ton and export duty is $93 per ton. That comes to about a total impact of USD 348 per ton. And we believe that the new base rate for April duty structure is also to be announced soon by the Indonesian authorities. The next, on the 1st of Jan, Malaysia reinstated the export duty. 8% duty, which comes to an approximate of $75 in money value, was reinstated after a break of 6 months from June to December 2020. So keeping this in view, it seems that, it's actually Malaysian CPO right now is placed at an advantage over Indonesian CPO. But those who understand the levy structure in Indonesia, you must know that the way the levy structure is designed, it incentivizes the exports of the refined products from Indonesia. So the Malaysian suppliers of refined oil will be at a disadvantage when they go into the export market. So this is a situation which would have an impact on the overall export and trade. Coming to the import structure in the buying countries, India, as we all know that India reviews its duty and structure quite often based on the prices, they review it periodically. But usually the change is in terms of the percentage going up or down. But this time around, on the 1st of Feb, India revised its import duty structure and introduced Agriculture, Infrastructure and Development cess, AIDC, of 17.5%. Now this, in turn, they also reduced the import duty levels. But for instance, if we take the example of CPO, the duty of CPO, which used to be 30.25% before this change, is now 35.25%. And the advantage that CPO enjoyed in India was about 8.25% over soft oil, which has been reduced to 2.75%. And this is a very significant change when it comes to calculating the landed cost. Anyways, we'll discuss about this a bit further in later part of the presentation. Looking at the production of CPO in Malaysia, the production for the month of Jan has registered a reduction of 15.5% when compared to December 2020. Yeah. And the exports of palm oil from Malaysia also registered a serious decline in January of 42% as compared to December. I need to just double check if I'm on the right slide, because I think my slides are running one slide slow. Anyways, yeah, so talking about the production and export. So the export numbers for Jan, as I was saying, from Malaysia are showing a decline, but it's already picking up in February. In the first 15 days data from some of the sources indicate that the exports are showing an increase of almost 27%. Similar trend is also seen in Indonesian exports. There was a decline of 25% in January. And this is primarily because the exports in November and December were very high, both from Malaysia and Indonesia, because buyers moved their shipments from January to early to avoid the taxes. So, but February forward, the exports are picking up, and we foresee that this trend continues. Talking about the price of Brent crude, it's already hovering between $62 was the price on 14th of December. But what we believe that price is already picking up right now is between $64, $65. And it seems like in the near foreseeable future, the price is going to maintain this level, which is going to be an interesting factor to see for countries to maintain and determine their blending mandates. All right, looking at the palm oil production analysis. As you guys, we know that palm oil is the largest produced and consumed edible oil in the world. And if you look at the production growth of palm oil over the years, we see that palm oil production has registered growth every year, year on year, in the last 10 years that we can see here. And even if we go back to historical data, we see that minus the major weather incidents, palm oil production has always grown consistently. And looking at this 10-year chart, we see that the production declined in 2016, which was because of El Nino and its impact. And again, in 2020, it declined from 76.67% of 2019 to 73.66% in 2020, which was because of combination of factors. Some weather effect of La Nina, there was flooding. There was, in Malaysia, there was shortage of labor. There was delay in harvesting because of lockdowns. But again, it is forecasted that in 2021, the production will recover further, and we'll see an overall production of 76.8 million tons per CPO. Looking at the imports, the import analysis of palm oil. Palm oil is also the largest traded edible oil in the world, with an average export of 55 million tons in 2019. Again, the import of palm oil has also shown a similar trend. It's grown consistently in the last 5 years from 44.8 million tons in 2016 to almost 55 million tons in 2019. There's a decline in 2020 because of obvious reasons and the COVID-related restrictions. So we have just given the percentage value of the few major imported regions and markets. You can see that these, for instance, Sub-Saharan Africa, EU, India, China, Asia Pacific. In terms of percentage, you can see that these markets' uptake has also increased consistently over the years. India alone contributes to about 18 to 20% of the total trade of palm oil. Similarly, EU constitutes to about 17%, India, China, Asia Pacific, all in the range of 12, 13, 14%. So collectively, these four regions accumulate to about nearly more than 50% of the total trade of palm oil. Taking a deeper dive into the Malaysian palm oil export summary for 2020. So total exports of palm oil in 2020 of Malaysia showed a decline of 1.1 million tons, which was nearly 6% from the same period of 2019. And if you look at the main regions that we have categorized for our exports, which is Indian subcontinent, Middle East, Africa, Europe, besides Middle East and Africa, all other regions have declared a decline in imports in 2020. As we all know that in 2020, the entire world, all the countries went through various degrees of lockdowns, some for a few months, some for a longer period of the year. And the biggest impact of these lockdowns was on the HoReCa and the catering sector. And palm oil being the preferred choice for this sector was adversely hit. There was a direct impact. We also saw that there was uptake, there was more cooking at home, people were more working from home, kids were schooling from home. So there was an increase in food intake at home, but the direct beneficiary of that trend was soft oil, because that's where soft oil has more usage at home. So, but the silver lining here, if we look at the value of exports in 2020 for Malaysia, was 48.89 billion ringgit, which is an increase of 7.4%. And thanks to the higher average price of palm oil in 2020. If we look at the top exports destinations for Malaysia in 2020 again, and I would say it's just not Malaysia, these are the biggest buyer of palm oil wherever it is coming from. So we can see China, India, Netherlands, Pakistan, these are the 1 million ton club people. And then the top 10 buyers alone contribute to nearly 60% of the total trade for Malaysia. And I would assume that the same trend follows for Indonesia and other exporting countries. So, one thing important to note from this trend is that any geopolitical change, any major change in tariff, whether be it from India, China, or exporting countries, it has a direct impact on the supply and demand dynamics, and it turns out and also impacts the price going forward. So these are some of the major players, and the policies and the tariffs or other conditions in these markets have a direct impact in the overall oils and fats market. Now, looking at the CPO outlook and major market projections in 2021, we're focusing on the first half of 2021. So both the production of CPO in Malaysia and Indonesia showed a reduction in 2020. According to the MPOC stats, Malaysian CPO production declined from 19.9 million tons in 2019 to 19.1 million tons in 2020. And we forecast that the production of CPO in 2021 will be approximately 19.6 million tons, an increase of 400 to 500,000 tons. The Indonesian production of CPO for 2021, I would say that your guess is as good as mine. Recently, we concluded POTS Digital, one of our big virtual conference, and we had the top 5 analysts presenting their projections and forecast. And for Indonesian production, all of them had various projections varying from 44 million tons to 50 million tons. But we anticipate that Indonesian production of CPO in 2021 would be approximately 45 million metric tons. And taking a deeper dive into the projected Malaysian CPO situation for 2021, how does the balance sheet look? So, like we said, Malaysian CPO production is anticipated to be 19.6 million tons. The export of CPO is likely to increase by 10% from Malaysia, from 4.4 million tons to 4.8 million tons in 2020. And the reason is, the Malaysian CPO right now is better placed in the market. It's competitive over Indonesian CPO because of the levies. And this again, we anticipate that the duty and tariff, Indonesian duty and tariff do not change, which is unlikely, at least for the immediate future. So looking at the average uptake of the Malaysian refining industry, which is in the range of 15.5 to 15.6 million tons, there'll be a deficit of CPO within Malaysia. And that probably would be met by imports. And this supply and demand scenario is likely to create a low month-ending stock for much of 2021. And we foresee that the monthly stocks in Malaysia would trend between below 1.5 million tons. And the entire mix is a classic scenario for higher CPO prices for the first part of 2021, or I'd safe to say for most part of 2021. Before I conclude, I would like to give a quick review of the 3 major markets or movers and shakers of palm oil, like we discussed earlier. So for India, the palm oil imports in India declined by 24% in 2020. Overall imports of oils and fats declined in India, but palm oil was worst hit with a decline of 24%, again because of the reduced demand coming from the HoReCa sector. The total edible oil imports in the first half of 2021 are projected to be 7 million metric tons. It's hard to put a number on the palm oil imports for 2021 first half, because right now the situation is very fluid. A lot depends on the landed cost of palm oil with competing soft oils. And then as we discussed that the competitive advantage of CPO has reduced by 5.5% from 8.25 to 2.75. And that reduces the attractiveness of palm oil over soybean. So that would be a key factor in India, and you'll see how it plays out. China, oils and fats demand in 2021 will see higher growth in the Q1 and year-on-year basis because the catering sector is recovering nicely. This was the time back in 2020 Q1 when China was the worst hit. They were the first one to get the worst brunt of pandemic. But we foresee as palm oil import will also see an increase, a positive growth in Q1 of 2021, but probably will see slowing down in Q2 of the same year. And that's because there's a very strong recovery of demand for soybean meal from livestock industry. If we talk about the first half of 2021, it is estimated that the total demand and import of palm oil is going to stay flat. Last year, June 2020, the total import of palm oil was about 2.6 million tons, and we estimate that it will probably maintain the same level this year also. EU, EU was worst hit with COVID-19 last year, and in this year also. So far, more than 28 million infections and nearly 700,000 fatalities. Total palm oil imports are projected to reach about 4 million tons for the first half of 2021. Palm oil imports are also at the same level of last year, to reach about 1 million tons for 2021 first half. This is also, the situation in the EU is also evolving. There are some countries adopting the early adoption of Delegated Act and restricting the use of palm oil in their biodiesel. So if that trend continues and picks up, then we might see a further decline in palm oil imports in EU. And with that, ladies and gentlemen, I'll conclude my presentation. Thank you very much. And I give the time to Dr. KP now.
At Refinitiv, a subsidiary for London Stock Exchange Group. So today I'm going to talk about the palm oil market outlook and what are the risks and opportunities this year in 2021. So here is an overview of what's going on in the palm oil market. So as we know, crude palm oil futures has been on the rally, since the second half of last year. So basically, there are a few reasons behind the price rally as listed here. The first one is a tight supply and stronger demand for palm oil amid an economic recovery. And the palm oil market has also been tracking a bullish momentum in the global vegetable oil market. And lastly is the Indonesian government raised export duties and export levies. And that had also provided supports for palm oil prices as well. And I'm going to discuss this further in my following slides. And in terms of our palm oil production outlook, we expect to see palm oil production in 2020-21 to be below potential. So I just wanted to highlight the two largest palm oil producers here, Malaysia and Indonesia, which account for around 85% of the world's production. And their production are expected to be 19.1 million tons and 46 million tons respectively. And we believe that there are some challenges which keep the production to below potential. One of the limiting factors that I want to mention here is the labor shortages, especially in Malaysia. So where the COVID-19 has caused travel and movement restrictions since last year. As we all know, in Malaysia, palm oil productions or the palm oil plantation relies heavily on the foreign labours. Around or almost about 70% of a plantation workforce are actually from the foreign workers. So with the absence of the skilled workers, there are many operations such as the harvesting and also the estate upkeep were already disturbed. So this has caused some production losses and poorer oil quality. And many plantations have also carried out the COVID-19 tests now for their estate workers. So some estates and palm oil mills actually shut down temporarily after their workers were found infected by COVID-19. So some plantations also restrict their workers from going outside. So all this actually raised some concerns over the supply chain. And well, for Indonesia, operation in most estates remain stable as there are no major supply concerns due to COVID-19 over there. So this is another challenge for palm oil production, which is the adverse weather brought by the rainy season or this one, a La Niña event. So here are some photos taken during January. So basically, you can see the plantations were affected by severe flooding across Malaysia and Indonesia, especially in the key producing states like Johor, Sabah, Sarawak, Pahang, and for Indonesia is Kalimantan Selatan, Kalimantan Barat, Kalimantan Selatan, Sumatra Selatan, and flooding in low-lying areas basically had disrupted harvest activities and logistics. Therefore, the production in Malaysia and Indonesia in the January last month were actually quite weak. And some estate roads were also damaged by the heavy and persistent rainfall as well. So, and some places even had landslides, and that will also require some time to repair the infrastructure. And fortunately, rainfall has begun to slow down recently. This is the weather outlook for March until May. So basically the western regions like Sumatra, Peninsula Malaysia should be monitored for potential dryness, while above normal rainfall is likely along the eastern sides or eastern regions like Sabah and the east side of Kalimantan. So overall, this weather outlook represents a slowdown of rainfall, which should benefit harvest activities and logistics in most of the areas during March until May. Okay, now let's move on to the demand side of things. So here I highlight palm oil imports from top 3 destinations, India, EU, and China, which account for around 45% of the global palm oil imports. So generally, imports from India and China in 2020-21 are expected to improve relative to the last marketing year, with the exception of EU. We believe that palm oil imports from India and China are expected to rise, mainly driven by the growth in edible oil consumption, a gradual economic recovery, and restocking activities. By contrast, EU palm oil imports will likely weigh down by some EU's policies, anti-palm oil campaigns, and also the COVID-19 pandemic. And one of the reasons that we believe that India will likely increase palm oil imports this year is due to their low vegetable oil inventories. As you can see in this chart, India palm oil stocks were at a very low level, around 400,000 tons as of December 2020, or down almost 40% versus December in 2019. And coupled with a global recovery in demand, therefore, we believe that restocking could be on the horizon. Also, palm oil is still cheaper compared to other soft oils, so that would potentially attract some buying interest. However, there are some caveats that bear watching in this case. The first one is the higher than normal rainfall in India during the last monsoon season. This will likely raise the domestic oilseed production. So if verifies, higher domestic output will mean they could lower their imports. So this is the first. Secondly is early this month, India announced a new import duty structure during the federal budget presentation. So in short, India has narrowed the duty gap between palm oil and other soft oils to 2.75% from 8.25% previously. So that could potentially affect some purchases in the coming month. Next, we believe that the rapid recovery of China's economy will keep demand steady. So in fact, China palm oil imports picked up since the second half of last year after there is lockdowns there. So in China, palm oil is still preferred by the food manufacturing and commercial sectors due to its cost effectiveness and versatile nature. Also, it has been widely used in the process of making instant noodles, frozen foods, snacks, and etc., which were highly consumed in China last year, and we believe the same this year as well. However, the caveats in this case is China's soybean imports. Okay, so as you may already know, China's soybean imports have surged to very high levels due to in line with their rising hogs populations. So basically, soybean will be crushed to produce soy meal, which is the feedstock for hogs, and the byproducts, soybean oil, will compete with palm oil in the market. So therefore, we think that the domestic production of soybean oil in China should bear watching. So next, in terms of the EU's palm oil imports, we believe that the COVID-19 pandemic and the EU's policies will curb palm oil imports. So basically, many European countries impose lockdowns and demand has been slashed, especially in the HoReCa sector. There are some EU's policies are not in favor of palm oil, such as the EU's Renewable Energy Directive 2. Basically, the palm oil biodiesel will be gradually phased out from 2023 until 2030. So EU also set the new food safety standards to limit the 3-MCPD and GE. These are the contaminants found in the refined palm oil. So in short, these EU's policies will likely curb the palm oil imports. However, we think that there are some bright spots in this case. So one of the reasons that keeps the EU palm oil imports quite stable so far is because of the shortfall in the rapeseed supplies. As you may already know, like EU rapeseed production has been disappointed for 3 years running. So EU needs to import other soft oils to fill out the gap. And also cheaper CPO prices relative to other vegetable oils and rising biodiesel blending, there is also benefit of EU palm oil imports. So in terms of our palm oil market outlook, and in the first place, we believe that fundamentals are still healthy, as reflected in the lower palm oil inventories, which keep the palm market remain supported in the short term. So if we look at the palm oil inventories, you can see that Malaysia palm inventories are very low, okay, with ending stocks at around 1.3 million tons in January 2021, which was the second lowest level since year 2004. As for Indonesia, basically Indonesia palm oil inventories were relatively high, but the inventories had dwindled by 19% from the peak of 6 million tons in October 2020 to 4.9 million tons in December. So that's actually mainly led by weaker production and rising exports during this period of time. Secondly, we think that the palm market is also supported by biodiesel policies, especially the Indonesian B30 mandate. As you can see in this chart, rising palm oil prices has widened the price spread between the CPO and gas oil to $450 per ton. So basically, biodiesel blending is not economically feasible for quite some time already. However, the Indonesian government still continues the B30 mandate this year by raising export levies to USD $255 per ton in order to fund the mandate. So in short, we believe that the Indonesian government's strong support for biodiesel programs will limit the downside risk for the palm market. And further support also came from mineral oil prices that are currently at the highest level since January last year. So basically, the high gas oil prices could lend some support to the palm-based biodiesel market as well. Next, soybean oil market remains bullish and is already now at a 7-year high. So in fact, not only soybean oil, many other vegetable oils like sunflower oil, rapeseed oil, and others are actually all already at the multi-year highest levels. So that's also keep the overall vegetable oil market very firm. As you can see in this chart, CPO futures have been tracking the bullish momentum in the soybean oil futures since the second half of last year. So although palm oil is quite expensive already, it is considered still cheaper than the rivals vegetable oils. CPO discounts to soybean oil is currently at $60 per ton, so it's still attractive in the vegetable oil market. Okay, next, there's a potential that palm oil yields in this season may not recover as swiftly as expected, mainly due to the impact of dryness in 2019. So based on the rainfall charts, as you can see here, both Malaysia and Indonesia experienced prolonged dryness in Q3 2019 that also resulted in fires and haze, if you can remember. So basically, the prolonged dryness would have a negative impact on yields, usually within the 2 years period after the dry spell occurred. So as such, we think palm oil yields could be lower than expected during Q3 this year. So if this scenario verifies lower than expected output, we also likely limit downside risk for the palm market during Q3. Okay, now let's talk about our price perspective. So technical analysis on the weekly CPO futures has shown some bearish signals. Moving average convergent divergence or MACD crossover has been formed, suggesting a reverse trend is in store. Previously, a MACD crossover was also formed during the first half of 2020, leading to a downtrend for almost 5 months. So, and next is the RSI divergence. Here also suggested that the indicator does not agree with the price action. So basically, these are some bearish indicators that warrant our attention. All right, so finally, here are some key takeaways. 2020-21 palm oil production is expected to be below potential due to adverse weather, labor shortages, the previous dry spell in 2019, and many more. Okay. We expect the palm oil imports from key consumers like India and China to increase this season on the back of a gradual economic recovery, growth in consumption, restocking activities, and etc. So there's also a potential uptick in demand in months ahead due to a festive season celebration like Ramadan. Okay. And in terms of our price outlook, we believe that palm oil prices will remain supportive in the short term, mainly on the back of firm fundamentals and also the bullish vegetable oil market. But in the long run, we believe that palm prices will likely gradually weaken over the next few months or towards Q3 this year, which is the high production season. Here we highlight some risks that should be watched. Firstly, potential weaker appetite for palm oil. High palm oil prices may curb some demand, especially from price-sensitive markets such as like India. Despite their inventories are very low right now, but the high prices have already kept the buyers there very hand-to-mouth. So this is the first risk. And secondly, South America soybean output may turn out to be higher than expected. Despite a dry spell in South America has already delayed the planting and harvest progress. But there's still a good chance that soybean output may turn out to be higher than expected due to subsequent beneficial rainfalls over soybean areas in Brazil and Argentina. And thirdly, higher oilseed prices may encourage more planting, thereby this will likely weaken the prices going forward. Recently, the USDA has projected that US soybean planted area will be boosted to a very high level in the coming season. So, and also sunflower planting from like Ukraine, Russia, EU are also expected to rise in the next season. Last but not least, key consuming countries may lower their palm oil imports in the event of a robust domestic vegetable oil output. For example, in China, as already mentioned, with the rising hogs population there, China will need to crush more soybean to get soy meal, which is the main feedstock for hogs. while the byproducts, soybean oil will be competed with palm oil in the market. So I think that's all for my presentation. Thank you.
Yeah, thank you. Thank you very much for your presentation and insights. So just a few words from my side. So dear audience, if you would like to receive a free palm oil market report from our research and also forecast team, please also complete the pop-up on your screen. And also I will give you like a couple of seconds to complete the survey, to complete the form. Thank you again, and thank you for joining. Just a second. Okay. I will give you 10 more seconds just to make sure you have enough time to submit to the pop-up on your screen. Last few seconds. Thank you very much for submitting the form, and over to you, Ahmed.
Thank you very much, Julia. Good afternoon, everybody. And thank you, Refinitiv and MPOC, for organizing this webinar. It's very delightful to be speaking next to my good friend Faisal Iqbal and Mr. KP, very prominent speakers and very excellent presentations. Today, I'll be talking about the impact of COVID-19 on the world economy and how that has affected vegetable oils and fats. It's important to understand what's going on in the world and how demand is changing and shifting in order to understand the price trends and supply and demand. So first we'll be looking at the global overview, and then we will look at the impact that it had on vegetable oils and fats. And then we're going to look at the production and consumption of vegetable oils and fats. Later on, we'll be looking at challenges and opportunities. And finally, we will conclude the presentation. Now, looking at this graph, you will see that a lot of countries are highlighted in red and pink. And that is because majority of the countries around the world have gone through recession and suffered negative economic growth. The countries highlighted in red have gone through negative 5%, and those countries in dark red has gone through negative 15% in growth. The only registered growth in 2020 was in China with 2.3% growth. And that is because they came back to the economy earlier compared to other countries. And on the bright side, for this year, IMF predicts that there'll be a 5.2 growth in 2021. Now, what happened in 2019, 2020, and how did the COVID impact the economy? 2020 has been described as the worst year since the Great Depression that took place in 1930. And that is because never the world have suffered such crisis economically, socially, and medically in its entire existence. The whole world crumbled and were brought down on its knees, and it went through into panic and major lockdowns. Now, these lockdowns that were imposed has caused major economic setback for major businesses, and it has also affected the food sector. The travel restrictions and the lockdown has put tourism and travel into sleep, and this has caused major airlines to go bust. And we have seen such airlines as Thai Airways, British Airways, Virgin Australia, declaring bankruptcy. We have seen a lot of hotels shutting down for the period of the lockdown, some reopening fully, some are reopening partially, and so on. As for restaurants, they were also had diminishing demands as more people were eating at home, and therefore there were overall economic pause during that period. Also, during this period, the demand for energy for crude oil has dropped significantly, and therefore the stocks for crude oil has increased tremendously to record highs. I read some reports that says that the stock of crude oil has increased by 400%, which is crazy. And this has caused the crude oil prices to crash in May 2020, which was followed by other oils and other commodities as well. Now, let's look at the impact on vegetable oils. The graph is a little bit small. I don't know if you can see it. But since the start of the pandemic, in beginning of 2020, the prices started to diminish. Of course, we are looking at 4 major oils, palm oil, soybean oil, sunflower, and rapeseed oil. The prices started to diminish from January all the way towards April, but it was going down at a slow pace. In Q2, which is from May onwards, that's when the lockdowns and the spreads the virus was spreading fast, and the whole world went into a complete lockdown, and that has caused the crude oil price to crash, and followed by commodities. And we have seen the palm oil price drop from 3,000 levels to less than 2,000 ringgit, which is about 40% drop in price, and other oils as well. In Q3, some economies started to reopen and some lockdowns were being eased. And therefore, China and India and other countries, they came back to the market, and they started buying aggressively to replenish their stocks. And that has gave boost to the prices of oils and fats. In Q4 until December, the price of oils and fats reached its record high. Palm oil almost doubled in price, and other vegetable oils increased by 15 to 60%. And that was because of slow in production, and also drop in stock levels and production shortages as well. Okay, looking at the overall scenario, crude palm oil prices have doubled from May to December 2020, and that was due to the tightness in production and limited supply of all major oils and fats. This tightness has been spilled over into January and now February, and we believe that it will be carried on until at least May this year. Last year, we experienced less than expected production output of palm oil and other oils as well. Particularly palm oil was because of the La Niña and labor shortage issues that we had here in Malaysia. And the world stocks of palm oil have dropped by 2.5 million. And Indonesia maintained its Bio-30 mandate, and it was planning to do a B40 mandate in 2021, but it has been put on hold. And that also have created some shortage. As for the other oils, there was a drought in the Black Sea region, which has severely damaged the sunflower seeds crops. And the production of oils, sunflower seeds have dropped by 2.7 million tons last year due to the less yield and low drop in production. So we expect that the price for sunflower oil to remain bullish until Q3 this year. Of course, this high sunflower oil prices have shifted demand from sunflower into soybean oil and palm oil. And rapeseed oil and canola oil have diminishing demand due to its high premium over other oils. And also soybean have suffered through tightness due to drought in South America and strikes in Argentina, which sent the prices for soybean oil rocket high and expected to go on until Q3 of this year. And recent report by USDA expects that the price of soybean oil to remain bullish until the end of this year due to diminishing stocks. Now, looking at the oils and fats production in 2020 and compared to 2019, for the 4 major oils and fats, there was a drop in production compared to the previous year for the reasons that we have explained earlier. These 4 oils, they contribute to 76% of the world's oils and fats production around the world. And palm oil itself, it contributes 32% of the overall oils and fats. All right, here we look at the oils and fats consumption. As you can see from the graph trend, in 2020, supply was sufficient to meet demand. However, going forward, through the coming years, 2025, 2030, the demand for vegetable oils and fats will surpass the production of oils and fats for many reasons. One is the reviving of the economies, the increase in demand for food and beverages, as a lot of businesses are shifting from non-food related into food business as a more lucrative business. And also you will see more demand from HoReCa when the economies come back and travel is now no more restricted as before. We are seeing increasing demand for palm oil and vegetable oils in oleochemicals, animal feed, very high percentage, and for the biofuel sector. For that reason, we need to, producing countries need to increase their production yield. They need to increase the planting areas, and also they should find ways to store oils and seeds rather than finding ways to get rid of them. All right, now we look at the challenges that we faced in 2019. And we need to understand these challenges to see how we can come up from it or how to find opportunities. The biggest challenge was the trade barriers that was set by many countries. I mean, other than the trade war that was going on between US and China, a lot of countries went into protectionism mode, and they started increasing duties on vegetable oils and fats, and to promote and to encourage local production and harvesting. Even though they are suffering a lot of shortage in the market, and it has caused the local prices to increase significantly, yet we have seen some countries have stood their grounds on these duties, and they are not willing to reduce them. Some countries, they will reduce them when they need to, and some they have maintained, such we have seen in many countries. Particularly West Africa and India. We have seen weaker demand due to drop in per capita consumptions in oils and fats. It's not that people are eating less, but because people are eating at home, so there's less oil consumed in restaurants and hotels. And also due to unemployment, people tend to save. So we have seen shifts in demands, for example, from soft oils into palm oil. And in palm oil sizes, we have seen a change in consumer behavior from buying 5 liter to 3 liter or 3 liter to 1 liter. And in some countries, even 250 mLs. So people are trying to save as much as they can and becoming more health cautious. And finding alternative or safer ways to eat. Diminishing demand from HoReCa due to lockdown and travel restriction. We have mentioned this before. Because of the lockdown, there was diminishing demand from the hotel sector, catering, and restaurants. The increase in the price of vegetable oils has made it less attractive to import. So people, they will result into looking into alternative sources, whether locally or in the regional countries. We have seen this in CIS countries where they used to import palm oil, and then they shifted into other oils, which they import from Russia and Ukraine. We have seen it in Africa, where they have reduce the imports of or shifted into other oils such as peanut oil and seed oils and so on. And we have seen also shifts in demands in other oils in other countries as well. The general increase in the price of goods have caused credit crunch all over the world. As we have mentioned, the price of palm oil has doubled, and this has caused importers and buyers to have limited or tighter cash flow than they used to before. Therefore, their buying quantity have dropped. It's not that the demand has dropped that significantly, but due to the rise in prices, they have to they need more funds in order to have the same size of business. And this is not only for oil importers, this goes into confectionaries and other palm oil users, where the cost of goods have increased their production cost, and it has brought down their production capacity to some by 50% and some by 30% and so on. Now, the next we have to address is the rise in container freight, which has increased tremendously by more than 200%. This had many impact on the purchase pattern and on the export of vegetable oils and fats. Mainly, the demand for packed vegetable oils and fats. We have seen a significant drop in demand for vegetable oils and fats in packed consumer products from December until now. And that is because the price of these packed products became more expensive than the locally produced oils at destinations or in neighboring countries. The increase in freight has also created a credit crunch for the consumers and for the importers as well, and therefore the demand has been has dropped for packed products. Not to say only it may not have dropped, but a lot of customers have chosen to wait until the freight rates come down, and also they have asked to defer shipments, hoping to get better freight. But from the way we see it, we don't see that the freight rates will come down anytime soon. And if this goes on, we will see a greater economic setback, and we will see countries going through especially exporting countries going through even a deeper recession. Now, with every challenge comes an opportunity, and some say every challenge is an opportunity in disguise. Let's see why. The higher seed oil prices made palm oil relatively cheaper for consumers. We have seen increase in demand for palm oil in retail sizes more than before. Usually palm oil mostly is exported in bigger packages or in bulk, but now we have seen more demand for retail sizes, especially in PET bottles and in jerry cans from 1 liter up to 5 liters. Also, we have seen mergers that have been established between producers and exporters and distributors at destination market. Due to the travel restrictions, and it's became more difficult to reach and to find new buyers. So we've seen a lot of companies appointing agents at destinations in order to market their product and increase their sales, or at least maintain their business. Another positive note, we have seen some countries starting to build their own shipping fleet in order to mitigate the freight issue. And I strongly believe that each country have to have their own shipping line and container fleet in order to safeguard their economic stability and growth. Another thing we had last year, the central bank have dropped interest rates, and therefore the commercial banks as well, they have dropped the borrowing rates, which have encouraged spending. And that encouragement in spending has also led to a lot of fund managers to come into commodities, and particularly palm oil and other vegetable oils, whether in physical market or in futures market. And it has this speculation also played a role in spiking up the prices on vegetable oils. But the better side of it is that a lot of people are coming into the food business, and hence it has increased the demand for vegetable oils, and it made the cost of doing that business cheaper. We have seen more companies investing in e-commerce and digital marketing, and I believe the way forward is to establish a digital platform to market our products, especially Malaysian palm oil. MPOC have created that digital platform, but I believe more work needs to be done to make it more accessible to consumers and to importers. And I believe it will be more reliable, more genuine than other websites that are common websites, which a lot of non-genuine buyers exist. I believe a platform endorsed by MPOC or Matrade will be very productive and very efficient. We will see more stimulus packages and incentives by governments to boost their economies and SMEs. And this will help people to go through this recession, and it will help people maintain their ongoing business and also enter into new ventures and new businesses. Since the announcement of the vaccine, some borders started to reopen, and tourism have slowly started to reopen again, and therefore the demand for Horeca started to come back, and this is you will see more of that for months to come once the vaccine has reached more countries and the rate of the contaminations have dropped. And the best thing we have seen last year is that the anti-palm oil campaign has quieted down. I think mainly because they had more things to worry about than to look at on how we do things. But yet, we as producing countries should not let our guard down, and we should keep on promoting and advertising our products and its benefits, and challenge all the anti-slogans that are made against it. All right, I would like to conclude with these points. There was a lot of talk on what is going to happen with the prices, where is it going, where is the market going. I would just like to make it clarify. Nobody knows the future. We can only analyze on day-to-day basis based on the market situation. The market as it is right now, whether it's palm oil or other vegetable oils, there is a drop, a slow in production, there's very limited stocks, and there is a very tight supply. And therefore, we would not expect the prices to come down anytime soon. We should see in the second quarter, I mean, we don't expect for the stocks to replenish before the third quarter, but we will see in the second quarter how the situation is, and then maybe our predictions will be different then. But for now, we see that the price will maintain, prices for vegetable oils in general will remain bullish, and for palm oil, it will average around 3,200 ringgit per metric ton this year, or $800 per metric ton. Number two, the demand for commodities as a more lucrative business compared to other businesses. As I've mentioned earlier, we have seen a lot of people coming into palm oil as a more, or vegetable oils business as a more lucrative business, as the demand for food and beverages, it's always there, and it's always increasing and not decreasing. Number three, as I have mentioned, export countries need to have their own shipping line to safeguard their economic interests and economic sustainability and growth. Number four, we will see more partnership between producers and distributors around the world. And I believe as a producer, this is something that needs to be done in order to safeguard your business. Invest more in e-commerce and digital marketing, and create a digital platform for your business to reach out to your customers and to expand into further markets. And last but not least, create awareness about palm oil and its benefits and its contribution to the society and the well-being economy and for the overall food sector around the world. This is just a small introduction on our company. We are palm oil producers and exporters. We've been doing so for the last 30 years. We do various packages in all sizes. We export to over 60 countries around the world, and we are located in Malaysia and Saudi Arabia, and we have overall capacity of 50,000 tons a month production. If you'd like to receive daily updates on palm oil trends and prices and outlooks, please subscribe to our channel, as you can see it on the bottom right corner, our Telegram channel. And that'll be all from me. Thank you very much.
Thank you, Ahmed. I think we have about 25 minutes to do a quick Q&A, and we have had a very active audience. According to our last update, our webinar was being seen by more than 200 people in the participation. And there is a lot of questions coming up, so we'll try to jump into it straight away. KP, can I throw the first question at you? One of our delegates want to find out, in fact, a few questions are about this. The CPU production is likely to go up both in Malaysia and Indonesia. What will be the impact on the price?
Okay, thank you. Thanks for your question. So the CPU production in Indonesia, Malaysia this year is actually, based on our production outlook this year, Indonesia production is actually will rise or increase slightly. And for Malaysia, it's actually will drop slightly because of some challenges due to the adverse weather and also the COVID-19 caused the labor shortages. So basically, in short, the palm oil production this year, what we see is still below potential. And how is the impact on the production to the price this year is basically what we see right now. The fundamentals are still very healthy. Because of the inventories in both countries, in Malaysia, especially in Malaysia, are very low, critically low, almost about the second lowest level since like 2004 during January 2021 or last month. So this actually has provided some support for the palm oil prices. But going forward, the palm oil production, what we see could be maybe pick up a bit during the second quarter or third quarter. Basically the palm oil production will pick up during the Q2 and Q3 on seasonality. So and also on the external front, like Brazil, the soybean will also will introduce to the market. So with all the supplies coming in during the Q2 and Q3, so basically they will put some or cause some pressure to the palm oil market. That's based on our views, and also based on our technical analysis, as I show in my slides just now. There have been some bearish indicators. So such as like the MACD crossover and the RSI, and that's all actually probably should warrant our attentions. Maybe going forward, we believe that the palm oil prices may gradually weaken in the coming months, especially towards the Q3. But in the short term, in terms of the short term, palm oil prices is still supported. As you can see right now, the palm oil prices still bullish, okay, still uptrend. But that's basically is mainly due to the external markets, like soybean oil futures. As you may already aware now, is still on the rally, challenging the new peak. So that's lend some supports to the CPO prices. So basically, this is my first answers to your questions. Thank you.
Yeah. All right. Thank you. Thank you, Ahmed. Now you started saying that 2020 was the worst year that we've seen in the recent history. Honestly, the first couple of months of 2021 are not looking that great either. But fingers crossed, the vaccine rollout is there. So how do you think that, the HoReCa sector will bounce back? And if it does, what impact will this current high prices will have on the demand that we were anticipating that this opening of the HoReCa sector will generate? Ahmed, we have no audio from you.
Honestly, Faisal, I believe that the demand will not change by much. The only demand change. Can you hear me now?
Yes.
Yes.
I was saying that we will not see much change in demand this year from last year. The only change in demand or increase in demand that we will see is from the rise in population. Overall, HoReCa demand, we have to see if how long this vaccine rollout will take. Some are saying it will take 2 years for the whole world to be vaccinated, and it will take 7 years for this pandemic to go away. So we can't actually know when the borders will be open and travel restrictions will be lifted, and when will the demand for this HoReCa will come back. But what I have mentioned that there's an increase in HoReCa demand, it was due to the lockdown when it was seized or eased in some countries. Restaurants were allowed to reoperate, so the demand came back for that sector. But an internal tourism in some countries is allowed, and therefore hotels reopened and so on. But until now, we have seen a lot of catering businesses are not operating. So there's not much catering for airlines or catering for schools or companies. It's still on the downside. So I don't see much change this year compared to last year.
Yeah, I tend
I
to
hope that
agree with
answers
you.
the
In fact,
question.
I'm glad that you covered another subject. But yeah, one of our delegate was also asking about the national vaccine rollout, that what immediate impact will it have on the market? And like you said, and we agree that, this is something which is going to take at least 2 to 3 years for it to have any significant impact when we start feeling safe to travel again, and the travel industry and the HoReCa industry gets back to its normal pre-COVID days. So moving forward, one of our
yes, of course, it will have a positive.
What is the impact of GE and 3MC? Yeah. All right. So moving forward, one of the questions was, what is the impact of GE and 3MCPD on palm oil import in EU? I'd like to address that. Basically, I think industry and major players are well prepared for this. They have had the levels. We were prepared for it, and already they are being supplied into the EU. So we foresee that moving forward also, the industry is prepared, and it shouldn't be a major factor to limit palm oil exports to EU. Would either of you like to add something to it, Emma and KP?
Yeah, sorry.
The impact of 3MCPD and GE in the EU market here.
Okay. So basically, the EU has set the new food safety measures to limit the intake of a 3MCPD and also the GE. So basically, this will actually set a barrier for the palm oil imports. As you may already know that in some like refined palm oil, there's actually consists the very high level of the 3MCPD and GE. So in order for the industry to address this, they may really need to re-examine the refined palm oil process. Okay. So to lower the 3MCPD levels in order to meet the requirements of the EUs. So that's actually for right now, as Mr. Iqbal say, in the industry, they are quite well prepared for this, but there are still many producers are actually still striving to meet the standards. So in the short term, I believe that probably there are still some producers may not meet the standards. So it will curb some palm oil imports. Okay, if they really how to say to have to really take care of it. So yeah. So in short, so yeah, that's all my explanation to address your questions.
All right, thank you. Yeah. KP, I'll stay with you on this because this has also been a question that has been asked by a bunch of our participants. Ahmed, yes.
No, I would just like to add, in general business practice, we should always cater to the customer's requirements. But sometimes the customer has to look at his own needs as well. In general, and its own benefit. If this will lessen the supply of palm oil to the EU or to Europe in general, then they have to shift to alternative oils which have even higher MCPD and all this level. So and it will cost their own business to shift from Europe to other countries in order to be able to mitigate this issue. So they have to look at their overall benefit before, making such strict requirements on our products. But of course, we will strive to produce and cater to the customer's needs as much as we can. But there has to be some balance between what can be done and what can be done, and balance in volume as well. And you can't set a premium for all products. We can set premium for certain products or standards for certain products, but we cannot generalize on all products for certain industry or for certain usages. And second thing is that if a customer demands a customized or additional or whatsoever standard of a product, then he has to be willing to pay the premium for that oil. That's all I have to say about that.
Completely agree. Yeah, thank you, Ahmed, and very valid points. I completely agree in those that, although industry is striving for what the customer wants, and if this is how it is, then, our palm oil producers will be hopefully ready to meet all the requirements. All right, there's one question which has been asked by a few participants. KP, I'm going to come back to you on this. The palm oil gas oil difference, which is between $400 and $500 right now, how much is it going to impact the blending mandates?
Okay, so thanks for your questions. So in short, the POGO has remained between the POGO spread has been remained between the 400 to 500 US dollar per tons for quite some time already. I think since the second half of last year, the CPO prices surged, until to the very high levels right now. And also the gas oil prices remain under pressure for quite some time until recently. We see some gas oil or the mineral oil prices pick up a little bit or recovering. So will this POGO's very huge spread between the POGO, CPO, and also the gas oil will cause any problems for the countries? My answer is yes. Let's for example, with this very high POGO spread, many countries will actually need lots of money to pump inside or to subsidize into the fund to fulfill the blending mandates. By taking Indonesia as an example, initially Indonesia, they will roll out the B40 this year, but recently they actually delay or they postpone the B40 programs because of the very high POGO spread. And right now, the Indonesian government still continues the B30 mandates. by raising the export levies to very high levels as well, to around $255 per ton. But last year it was actually around $55 per ton. So it's actually increased quite tremendously for the export levies in order to support the biodiesel blending programs in Indonesia. So for Malaysia, actually our B20 is also putting on hold, and because they want to prioritize the economic recovery. So some of the programs also has been postponed to next year for Malaysia. And for European countries, by contrast, they raised some biodiesel mandates. Okay, so in Europe, okay, what we see that probably parts of the palm oil imports are actually benefited by their rising biodiesel mandates in Europe. But for China, by contrast, I think because of the very high POGO spread, some of the biodiesel market in China has actually slowed down to a very, very low levels. So in short, I think the very high POGO spread has already caused some problems in our economic and also the biodiesel markets, right? Yeah,
I'm glad that you covered another question, which was a follow-up question to this, that, Malaysia and Indonesia. Yes, Malaysia, I think the 2020 implementation will be further delayed, like you just mentioned. And Indonesia, we hope that B30, there seems to be quite committed on it. So even that would support a lot of supply questions. There was a question on the EU, on one of my slides, when, the phasing out of subsidy on biofuels in EU, will it impact the prices and will it create an overproduction crisis? So I would like to address this, that, there might be some temporary impact on the price. Although the phasing out period, according to the Delegated Act, is from 2023 to 2030. But certain countries have announced, like one country has announced that they're the early adoption of this mandate. So yes, there is a temporary impact on the price. And in my opinion, there would not be an oversupply crisis because the demand for palm oil has grown in many other regions, in many other products. One case being the higher need for, with this COVID, the hygiene and the oleochemicals demand. And also the biodiesel mandates in Indonesia and Malaysia will be key in managing production and supply. So I hope this would answer the question that was posed to us. Ahmed, I would like to come back to you. One very important question, the point that you raised was the logistics, that containerized cargo has seen the price, number one, go up insanely. And secondly, there's also a severe shortage of containers. And also you pointed out that, a lot of demand has shifted to consumer packs. Is it going to have any impact on the Ramadan demand and supply?
Overall, we will, as I mentioned earlier, that the consumers or importers are waiting for the freight rates to drop in order to place the orders. But what happened the last 2 months is that there's a huge shortage in destination market. So they will soon come back to the market and they will to stock up for Ramadan season, and they have started to do so now. So and they are paying the price, but they will not be able to sustain these high levels for so long. I mean, because they are still struggling on how to pass this additional cost to their consumers, and even producers are worried about how to pass these extra charges to the customers as well. I mean, those who have palm oil as part of their ingredients. Food ingredients, sorry. So this has caused a lot of uncertainty and a lot of doubt and whether to wait or whether it's going to come down or that, and that has slowed down the demand. But we will see, yes, less demand than before for Ramadan season, but there will still be demand for this coming month.
agree. All right. All right. I think we'll take probably one last question. We have been alerted that we are coming to a close of our seminar. So there was one question raised, that is EU also using, we're talking a lot about the HoReCa sector and how palm oil is the key ingredient. If EU is using palm oil in the HoReCa sector, so the answer is yes. In 2019, an estimated of 550,000 metric ton of palm oil was used in the HoReCa sector in EU. However, rapeseed oil still is the major oil used in HoReCa. Okay, I want to squeeze in one more, and I'd like both of you to give brief answers to this. One of our delegates has just posed a question. When would we see ending stocks in Malaysia and Indonesia to start to rise in 2021? KP, can we go to you first? A quick one.
Yeah, I think yes. Okay. I believe the palm oil inventories will rise. Okay. When they are more when the production pick up, especially in the Q2 and Q3. Okay. So and also but I believe that the palm oil inventory is still below average levels, so that will keep the palm prices supported. As you may already aware that in January 2021, Malaysia's palm oil stocks was the second lowest level since 2004. So I believe it going forward. The palm oil inventory will slowly or gradually pick up. That's what I believe.
All right, Ahmed, what's your take on this?
I totally agree with KP. The stocks would not replenish before the third quarter of this year, as we have seen shortage spillover from last year until now. A lot of refineries are operating at a much less capacity due to the shortage of and availability of CPO. So we will not, and this will take time for the stock replenish, as importing countries are still buying CPO from Malaysia due to the difference in duties between Malaysia and Indonesia. It still made Malaysian CPO relatively cheaper, even though we have an 8% duty on export. So there's still export of CPO going on, and at the same time, there's a shortage in the market for the refineries here, for the local production, and this will take some time for the stock to replenish. Last year, we were predicting that it will replenish in Q2, but this year, I think it will not replenish before the third quarter of this year. So as Mr. KP said, yes, the price will remain supported until sufficient stock, we have sufficient stock inventory of palm oil.
Thank you, Ahmed. Thank you, KP. I think we have really come to the end of our allotted time, although there were a lot more questions that we could have gone to. But I think I'll just go back to Julia to wrap up for us.
Yeah, thank you very much, Faisal. So a big thank you to you for moderating this Q&A session and for your presentation. Big thank you also to Ahmed and also Kian Pine for joining us today and for their insights and presentation. Many thanks to the audience who has joined us today. And again, as I said at the beginning of our webinar, the recording will be sent to your emails you left when you registered at the webinar. So again, thank you very much for joining us today and have a lovely day. Thank you. Goodbye.
Thank you, Julia. Thank you, everybody.
Thanks, everybody.
Thank you.
Bye.